Hey, it's about that time again, folks. About that time again. Welcome back here. You know who this is. Joseph James here, School of Trade, Sideways Markets. It's 11:45 now. So just about to finish up an incredible day here in the markets for the second time this week. And if you got our newsletter email this morning, what was the title of the newsletter this morning? Wedges galore. So let's get right off to the start. We knew this morning we had lots of price wedges. Let's talk about what made our job so easy this morning. First of all, we knew going into it, today was Tuesday, and we knew we had some major news. We knew that 8:30 news and 9 o'clock news would likely get this market moving. We then knew that that very important consumer confidence number at 10 o'clock, remember, consumer confidence is a leading indicator for consumer spending. Consumer spending leads to more jobs, right? More economic growth, more recovery. So we knew we had some major news. Durable goods, very big news. Consumer confidence, very big news. All right, so we had some major news this morning that told us to expect things to be moving. We also, and again, I'm not a big fan of hindsight. Let's go back to our blog. And on the blog, scroll down to the morning prep. Let's go down to that morning prep. And on the morning prep, we posted what we call a heat map. And this heat map told us we had a lot of markets moving today. Not that many that are in the red. Do you recall what it looked like yesterday? Yesterday, we saw mostly everything red and only a little bit of green. So this morning, we came in very optimistic that we'd have a lot of news to get us going. The heat map told us it was definitely moving early. So that gave us some wind at our backs. We then grabbed the dollar. And the dollar index, it gave us some really big clues. Let's go back to my blog. Let's find that dollar index chart. And here is the dollar index. And here's our plan this morning. Again, I'm not a big fan of hindsight. I like to use what we were looking at this morning at 7:30. And this morning on the dollar, what we had was a trend line off the highs, which made for resistance, a trend line off the lows, which made for support. What is that called, guys? That's called a wedge. And what do we know about a dollar wedge? We know it's going to produce wedges on other markets. What else do we know about a dollar wedge? It's a big personality clue. And what personality does it tell me about? Fade the breakouts. If we get new higher highs, sell it. If we get new lower lows, buy it. So we knew we had lots of news this morning that should get this thing moving quickly. Well, then we have this dollar index, which showed us some overhead resistance and some support below. That told us dollar wedge, trading right around the previous low of day, made us wonder if this market would even move today. A little bit conflicting to what the heat map told us. So we knew if the dollar stayed at that previous low of day, we might be in trouble this morning. But it didn't. What did it do? It rises higher. It jumped up and tested that trend line as resistance. So the dollar began to move just after we got started today. When that dollar began to move, it moved up to the highs and then began to drop. What was our plan on crude? Anybody remember? Here's our crude plan. Our plan on crude was pretty easy. Now here was the initial plan on crude, which we later on updated once price moved around. What do you see on crude right now? I can see it. See that bear channel? Okay, there's one big clue, a bear channel. How do I trade a bear channel? I sell the highs. I sell the resistance above the highs, right? If price was to break through it, I would sell above the highs and bring it back down in. And then didn't we just talk about a personality trade on the dollar? Fade the breakouts? Absolutely. Now, what we later on found was we later on went in and found this low here and this low here, and we created a wedge. So this became what we call a bear wedge. Why is it called a bear wedge? because it's inside of a bear channel. So the bear channel meets a price wedge. We already know we've got some market personality that says fade the breakouts. And once I see that wedge, just like yesterday, we want to fade the breakouts, the highs, buy the new lower lows. In other words, it's a fake out breakout market. Now, remind me, guys, if we had a bear channel, where would the higher percentage trade be? Sell the highs. If we had a bear wedge, where would the higher percentage trade be? You got it. Sell the highs. Absolutely. So remember, everybody, we have a directional bias now to sell the highs. What is that going to take for price to drop? The dollar will have to go higher. So while the dollar is rising, we get a chance to sell the wedge highs. While the dollar is falling off those highs, we get a chance to buy the wedge lows. It worked out perfectly today. Again, no hindsight needed. We knew we had a wedge. We knew we had the personality we needed there. All we needed now is for price to come to us. First couple of trades this morning. Here's my 34 range chart on the crude. First couple trades this morning. We find ourselves at 9 o'clock at the lows of the wedge. At the lows of the wedge. And I'm going to try now to buy those lows. You can see my first few trades today here were buying the lows of the wedge. You can see here on crude, two-step long, two-step long, two-step long. The first 3 trades I took were buying the wedge lows. Long, long, long. Didn't get a lot of the first couple trades, 19 ticks and 15 ticks, but the fast track was the winner. The fast track always seems to be the big winner. 40 tick winner on the fast track. And you guys can see those referenced right here. My first couple trades were taken on the 8 range chart. So here is an 8 range chart on the crude.